Okay, guys, we also know that there are some red flags in trading, and we can be right all the time. As we know, the majority of traders, they follow the big whales. So we see that our whales buy here, 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 and here. The last price then they buy is 58K around, that they actually protect their 49 buy. Means they still hold some assets. This is a 1 week, so we take the more the average biggest chart range which is possible. And here I enter into the price, counting on it was like 4 days ago, counting on break even, which is actually possible. However, I'm considering to quit from this deal for right now because we see that the stop trigger is too low. The maximum that I can afford is 77. So still, despite a long time pass, I'm doing emotional trades, but I have a system to protect me from these trades. This is just like a fun account. Let's analyze how we shouldn't do in trading. I also use the oscillators and MA lines. And I see if this yellow line will cross this purple line, that means we will break out this strong price level. But from my perspective, as I can see, now we have not that much volume in order to break through that. I also look on order book, and I look what are the major selling and buying power. Selling power is much more bigger, and I understood it from the market situation right now, as the majority of investors are kind of afraid. But in order to just to be not that subjective, what you can do, you can check fear and greed index, which tells about the I usually use alternative me all the time, 5 years already in a row, and it usually works really good. It analyzes all the market behavior and all the um, orders which are placed. So now we go a little bit fear, which means we probably can go to the flat. If it will break out as I was originally thought, I will be happy that I was right, but more happiness money brings than being right. That's the main rule that the beginner trader should understand. You shouldn't be right, you should earn. I'm sorry I didn't show you that. So we go to the alternative me, we see that here now is like average fear. So we can assume they collect all the orders on the market, and despite if they're majority of short orders or long orders, in the public tracking data, they put the mathematical score for fear or greed. So we have big chance of long flat before we go in somewhere down. We see the support level is 73, or up to 89. Why I'm so confident about these levels? Because I watch on previous ones. Look over here. We watch here closely, and we see that price touch the when price touched the 90 level before, it was huge up downs. Here it's a little bit went off out, but this was usually we name it chasing of liquidity, getting the liquidity. So sometimes when a lot of traders put here a lot of buying slots, huge buyers just take these buys and then they sell. That happens very often in the market. I'm trying not to use specifically very professional terms, just in order to be more transparent as much as I can. but we can consume that the full breakdown. My long position, of course, like here it is. We can assume that we have absolute bull market in case we hit at least 97 and we go further on 109. There we will update. The volume should be those that they break even and update prices. For now, we don't see these volumes that can. We should screen on the market, and if we break 99 or 90, so we can wait for this breakout, as we can assume that they buy on 59 and they will hold. If they buy a little bit here more and we will have breakout, of course it can go down, but however you at least know where you can put stop losses. So here I'm usually the short trader. What I would do, it's my entry point usually, but here, because of MA, I'm still doubting. I would put the stop order here, which can be easily liquidated. However, the risk reward ratio will be the same as I want, because if we will go down, we will go back to at least 75, and my loss towards the profit will be 1 to 3 to 2. So here, man, I should reconsider.
What they say, they floating, they gonna be hating. Put both feet. If you put both feet, we'll give you a big bag of seeds. See, damn it, man. See, premium from Costco. Now I have to contemplate. I have to consider. Ooh, I'm aquaphobic, man.
Of course, this stop loss is unacceptable. Don't open the deal in case you don't okay, I don't open the deal till the moment I see clearly that my stop loss is close to the price, and so I wouldn't lose a lot. I can play with this and leave this as a fun account. The deal is too small. However, this is an example of a deal how you shouldn't act. You shouldn't put your stop loss unproportionally. So here I would lose all of my. It's an all-in deal. Try to find the spots where your stop loss will be closer to the current price. What you can also watch, you can watch volumes. You can see how much buying power and selling power here was. And here we have good buying power. That's why we are still inconsistent here. And this is a probability game which you choose you play or not. What else you can do? You can take the indicator of trading sessions and watch on when the major volumes are. That will help you to define who are the major traders on the market. Later on, I will show you exactly the name of the indicator that you can use, and it's very clear. You can find it in the description to this video. Trade safe. I want to just share with you that you can always compare the volumes with the trading sessions. There are specific indicators for that. I will leave you indicator right under the video for the trading session, so you can see where is American, where is Asian, UK, and you can see who are the major players, especially on crypto markets. What I'm gonna do, I'm gonna watch the market. However, my stop trigger will be moved up to our support zone, as of course we see here where it touches, and this is the amount that I can allow myself for profit in the 1 to 2. Of course, perfectly it will be 1 2 3. However, even here, to tell you the truth, I will actually double check it at the evening, because if we break through this price, we can be in flat so long. So there is no sense for me to stay in a long position here because too much expectiveness, too low volumes, and almost nothing to do in this market. I was commenting regarding my deal. I think that there is nonsense to wait for a long time. We saw that we already tested this level and more probability that it's go down. So what I will do, I will reduce my stop loss trigger to the minimum one, just in order of through on London or UK or US session. If they will just overpush this price, which is probability so low, but the profit which I expect will be the ratio 1 to 3.5, which is normal. This loss for me is also normal, but what I also want to do, in case the price will go lower, I will put stop loss right after 83, and I would expect my take in 73. After a lower and 60, they will support it in this price. So stay safe. Keep inspired. Remember that what will support you on your trading way is cool people around who are also in your passion, discipline, and the ability for critical thinking. Don't afraid to make mistake, afraid to lose money. Always remember about risk reward ratio. Stay healthy and wealthy. See you.